South Africa's construction sector remains under pressure. This has raised concerns for the industry's future. Janine Weilbach, she's a research analyst at Thebe Stockbroking, joins us in studio to tell us more. Tell us if this industry is all doom and gloom. But Janine, you said to me that there are definite things that we should consider when it comes to construction stocks, about the exposure, South Africa versus where else they may be exposed to. So just tell us a bit about that first.
So if we're looking at the construction sector in South Africa, I think there are companies that are probably going to benefit more or take more strain in terms of their exposure to the South African market. If you look at Group 5, it's like 76% of their revenues come from South Africa, and the split with Stefanuti Stocks, where it's a South African play as well. Robex, the same thing. Whereas if you look at if you want to call it the larger cap companies, Wilson Bailey Holmes, 60% of their order book is in Australia on the building side, very low margins. Murray and Roberts as well, not just that it's in Australia, but it's not even construction, it's oil and gas. So if we're going to look at the construction sector specifically in South Africa, I think that it's more, we must look at the smaller companies that are more predominantly based in South Africa and were operating in South Africa and Africa for the growth and the opportunities, maybe more so than the ones that have Australian exposure.
And I mean, maybe if you look at just the construction sector in South Africa specifically, I mean, I remember going to Group 5 results, and it's all about, we're pushing into Africa, we're diversifying. I mean, that's one of the big messages management seems to be getting across. But if you look at something like, I think it's one of the stocks that you're going to pick today is Calgrove M3. I mean, that has been an absolutely outstanding performer, and it seems like a jewel, almost in a sector that's so beleaguered. I mean, what is there, so a company like that, what is their competitive advantage? Why are they doing so well when the big guys are suffering so badly?
Well, I think Calgrove is a captive market, and I mean, if you go back since listing, they have really paid their school fees, because when they started out, it was just the start in 2007. We had the subprime crisis in 2008. The whole housing building industry just collapsed, and they really struggled for quite some time. And they've just soldiered through. And now what they have, but I think the other construction companies don't have, is that they've got that first mover advantage into the mixed housing development scheme that they're running. Also, they've got a very flexible employee structure where they don't have to do capex. They do not have capex on their books. So the time that it takes to rezone and get the bulk infrastructure and everything in, they don't actually have to have staff waiting, construction workers waiting to get into that space, because they subcontract. So they don't have to have the yellow machinery. So all that capex that larger construction companies have that are working in the civils and building industries, they don't have that negative exposure that eats into the cash.
We've often heard the construction companies talk about the pipeline from government. They are exposed to RDP housing, but this isn't necessarily a negative thing.
No, you're looking at mixed development. So a part of their business will be RDP housing, which they'll get from government. But then they're also looking at affordable and right up to middle and high income as well. They're doing, for example, on the four-way side, they did a retirement village on the high income level. So yes, if the government can't pay, they can always upgrade those RDP houses and sell them as affordable houses. So they mitigate the risk quite well. Whereas a company that are in the affordable housing space, like RBA, for instance, they cannot do that because they only sell one single element of the housing scheme.
If we just take it back to the construction industry in general, obviously we've seen a lot of competition commission fines coming through. I mean, is that now out of the works? I mean, do you think that the sector has fundamentally changed? I mean, or do you think we're going to see more of those sorts of impairments coming to the companies?
Well, we've heard from a number of the clients that are actually looking at going after the construction companies. They need to prove that they actually were paying more than they should have, which is a long process. And a lot of the construction companies say that, the margins were not that great during that time. It was just allocation of a lot of contracts at the same time. So if they can prove that they were paid too much, yes, then there should be some repercussions. But from what we're gathering, that it's not really the case.
I want to touch quickly on Robex, because that is also one of your stock picks.
Yes.
This is just beyond making sure we've got roads.
Yes. Well, Robex started out as a roads contractor, and a lot of people said, well, it's a one-trick pony. And I think what you're looking at Robex is that they have pretty much internalized their whole supply chain with bitumen supply through the acquisition of Tosas, but they've also developed an infrastructure division, paying very little in terms of skill, and in terms of I can say CapEx in terms of bringing companies on board. They've taken stakes in smaller companies just to have that capability, but ultimately they've looked at the skills base and taken key management people that have experience in the industry and put them in place. And they've managed to grow that infrastructure business in a matter of 2 years to a 1 billion rand operation, which some of the smaller construction companies are actually struggling to have a run rate of 1 billion rand that are listed. So it's quite commendable.
Thank you so much, Janine, for coming in and giving us more perspective on the construction sector. It looks as though it's not all doom and gloom, especially when you're looking at those particular stocks. Thanks so much to Janine Weilbach. She's a research analyst at Thebe Stockbroking.